Hey guys, if you have missed last week's video, you want to hit pause and go back to the channel right away. I discussed 4 low yield, high growth stocks on the Canadian market, and today I'm doing the same thing but for the US market because I do have a lot of Americans watching this channel, and for all my Canadian friends, you really should consider having like roughly 50% of your portfolio on the US side because it is, let's be honest, the best market in the world. So today we're going to look at 4 low yield, high growth stocks that could be in your portfolio. I have 3 of those 4 in mind. And most importantly, because my strategy revolves around finding dividend growers. And the best dividend growers are often those with a low yield and a high dividend growth policy. It's just normal because those are thriving businesses. Speaking of thriving businesses, let's start with Visa. So Visa's dividend triangle, as you can see, going up pretty much all the time. And here's the thing. It's always overpriced, right? So you see revenues going up, you see earnings per share going up, you see dividends going up, and since they IPO'd, you see also their stock price going up all the time. Funny story, I bought it in 2017, and even 2017 I thought, wow, that hurts. It's very difficult for me to buy a stock that A, pays a yield of like 0.50%, and B, always trades at crazy multiple. So the question you must ask yourself is, why in the world it is trading at such high multiple, and is it time to invest in Visa today or not, or is the growth story is behind? So let's take a look at their business model to understand a little bit more about Visa. So what you see here is the revenue breakdown for 2022. What you do not see here is net interest income. How's that possible? It's a credit card company, but here's the trick. For both Visa and MasterCard, they do not carry the burden of the debt. So if consumer runs into a recession, they're tight on their budget, they're not able to make their payments on their credit card, Visa doesn't care. They don't care because the bank issuing the card is responsible for that debt. On their side, they're just charging fees to process all the payments. So they're charging fees to the bank, they're charging fees to the merchant, and they just process the information. So look at Visa as a 1/3 financial sector because they're playing around with money, obviously. 1/3 technology sector because they have the largest payment network in the world, and we all rely on the trust and the robustness of that network. So it's all about technology. And another third would be consumer cyclical sector. Why? Because the business is making a lot of money when consumers are spending with their credit cards. Most importantly, when they're traveling and you have cross-border volume, because this is where they make the most money because they charge to process a transaction, but they also charge because you're making a transaction in a different currency. So it's like a double dip on their margin, which makes them quite happy. So going forward, what's gonna happen? Well, the world is moving digital, so we're gonna pay less with dollars, and we're gonna use more our cards. And by having the largest payment network in the world, they are trusted across all countries, and they offer all kinds of solutions of payment transfer. So they do government to government, they do government to business, they do business to business, business to client, and client to client. So everybody can use Visa's technology and payment network to transfer money from one way to another, regardless of the currency and regardless of the cryptocurrency as well. So those are the things that are well established to move forward and evolve. So if tomorrow we just use cryptocurrencies, well, Visa will be able to adapt and still make their money out of that just by offering that security level and that trust that we need. I mean, you're not going to send money out in the blue thinking that you may get hacked or something, right? You want to rely on a solid business, and Visa is offering this solution to all countries. Moving on to the next one, kind of interesting because this one is not in my portfolio, but I kick myself every time I talk about it. United Health Group, ticker UNH. So as you can see here, revenue steadily growing, earnings almost as steady growing, dividend growth, well, growing as well. In fact, what you're looking at this dividend triangle, you see double-digit growth for all the metrics, revenue, earnings per share, and dividend. Obviously, you also see that the stock price goes up for a long while. So when you look at this type of dividend triangle, you may think, well, Mike, that was an amazing pick 10 years ago, but we're not 10 years ago, we are today. So what's gonna happen in the future? Because the graph here is just telling you what happened. It's not going to tell you what is going to happen. It's just showing you trends, but who knows if the trend is not going to stop next quarter or next year in 24, right? So then you need to understand the business model and have a solid investment thesis. So you have to make the narrative fits within the number. So explain why this business is showing such a nice dividend triangle right now, and is this story is going to continue for the next 5 and 10 years. So let's take a look at their business model. So business model is quite simple to understand. United Healthcare is the US largest healthcare insurance provider. Makes them a huge leader, but they haven't stopped there. They made a bunch of acquisition and now they have divided their business into Optum and United Healthcare. So on one side with United Healthcare, they offer healthcare insurance. But on the other side, with Optum, what they do is they provide those healthcare insurance. They have Optum RX as well for prescriptions and drugs. So what they do is they created a one-stop shop. They're kind of like vertically integrated in that way where you have the insurance with United Healthcare, and then when you need a care, when you need a service, you also do business with them. So they are able to package everything in a better way, be more efficient, generate more margin. And one thing that is amazing about United Healthcare is, you know what, you know that healthcare regulation is quite complicated in the States and it evolves all the time, but UNH has an amazing track record of adapting their business model to always make sure that they work hand in hand with regulators and find ways to grow their business even if the rules of the games are changing. So whenever you're aware first where the rules are going to change, well then you can adapt your business, and this is what United Healthcare does, and they do it like in the best way possible, and that reflects into the numbers. So going forward, what's going to happen? Well, people will not stop needing healthcare insurance and will not stop needing healthcare services, right? So United Healthcare is definitely at the right place at the right time, and this is why the growth story that happened over the past 10 years is likely going to continue in the future. Moving on to the next one, that won't be a surprise because I just did a video on this one, and it's Costco, because I believe it's the best retailer in the world. If you have missed that video, just give me a thumbs up, subscribe to the channel, and go back in time. A couple of weeks ago, I think a few weeks ago, I did a video on Costco because about a month or two ago, I added it to my portfolio. Why? Well, look at that dividend triangle, which is kind of crazy, but obviously I did a full video, so just go watch it. I don't want to spend too much time on Costco today, just to show you again, when you look at the dividend triangle like this, you may be thinking, okay, maybe the growth story is over and it's going to start slowing down moving forward. So then you have to go and see if there's an investment thesis to support the growth story moving forward. This is exactly what we have here, as you can see with the number of warehouses that Costco has. They have created this in the US, in Canada, and in Mexico, but then there's plenty of growth outside. So now it's time to grow in Europe, now it's time to grow in Asia, especially in China, and to export that amazing business model outside of North America. If they are able to do that, they can open so many stores across the world and continue the growth story as it never ends. So this is what I see for Costco moving forward. I think that this business model is amazing. They have so much data from their consumers because everybody needs to be a member to shop at Costco, so they know how to sell the right product at the right price at the right place and continue to attract those members. They have a ridiculous renewal rate at Costco as well, which makes them a very solid retail business with a lot of growth perspective moving forward. Last but not the least, another obvious pick, you're gonna tell me, but I decided to make the jump into Microsoft in 2017. Why did I buy so many stocks in 2017? Well, it's because I quit my job as a private banker and decided to focus on dividendstocksrock.com. So that's a membership website to help investors, actually thousands of investors, to manage their portfolio, invest with conviction, and enjoy their retirement. So what happened is in 2016, I took a sabbatical. I jumped in a small RV with my wife and my 3 kids, and we drove across North America. We ended up in Costa Rica. We live in like Central America for like 7 months. And then I realized, okay, so right now I'm helping a few hundred people as a private banker. Might as well help thousands of investors, right? And this is why I decided to make that switch. So when I came back in 2017, quit my job, received my pension plan as a big fat check where I can now invest in a retirement account, and I decided to start to shop around. Most of my investments were made on low yield, high growth stocks. And back then, Microsoft was trading at an overpriced value of $75 a share. Everybody said, do not touch Microsoft. It's overpriced. I mean, FastGraph, financial analysts, people at Seeking Alpha, everybody said, wait until it's like $55 or $60 because at 75, you're burning your cash for nothing. Well, look at this graph. Now it's trading above $300. So maybe it was a good timing to buy at $75. So sometimes that overpriced, overvalued narrative, it really depends on what you think is going to happen next for the company and how it will grow in the next 10 years. Maybe it's not the perfect timing to invest today, but you don't know what's going to happen in the next year and the next 5 years. So I rather invest in companies that I believe in, where I have a strong dividend triangle that is also backed by a strong narrative. So I make the narrative and the numbers combined together. When that happens, I push on the buy button. For Microsoft, the beauty of it is its ability to generate a lot of cash flow from their core business and invest that into new projects. So they do have a lot of software that they sell as a license, such as Office 365 and Dynamic 365, which are part of the productivity and business processes. They offer a bunch of service to corporate America. So as a retail person, you're gonna buy like a license of Office 365 and you're gonna pay every year. But what's more important is large corporations are going to do the same thing and even pay for more services from Microsoft, creating that sticky business, a really strong bond where you have thousands of employees working on the same platform using the same software so they can understand each other, and then you pay that as a utility bill every year. So it generates tons of cash flow for Microsoft, which enables them to invest in great products and great projects such as the intelligent cloud. So now you have company segments such as Azure, which is the second largest cloud business for public services, public cloud service, sorry, kind of like mixed all the words here. So the second largest one behind Amazon, it is growing at a very fast pace, but you needed a lot of money to invest into that technology in the first place to grow that business to a 24 billion of sales in last quarter, which is kind of amazing, right? Today, they're investing in artificial intelligence with ChatGPT and OpenAI. Maybe it's going to be a big success, we never know, but generating that money all the time enables Microsoft to try multiple projects. Some of them are busts, some of them are great success, and it continues the growth story here. They do have a lagging segment, which is more personal computing, which with Windows, Microsoft Surface, and they also include their gaming platform, Xbox, in it. This one is not where you're gonna find the growth, but it's a decent cash cow, generating some money. Sometimes it grows a little bit, sometimes it doesn't. Like the last quarter, it was like down 4%, but nothing alarming as well. So that's just like steady Eddie cash flow generating business. But the other two part, productivity and business processes, intelligent cloud, they're definitely not done growing. This is what is exciting about Microsoft. Now, if you want to know how to select those low yield, high growth stocks, because I get it could be confusing and you could wonder if the growth story is over and the dividend triangle is going to weaken, and then you're going to see like revenues going down and so on, and you're not too sure if it's the right time to buy a stock or not. I'm hosting a free webinar on November 2nd. You have the link right there. It's dividendstocksrock.com/dividend-income. Why? because I'm going to help you create a dividend income for life. So we're going to look at how we can select great stocks, how you can build your portfolio, and how you can manage that portfolio for withdrawals when you are retired. So how you can create that dividend income for life coming from your portfolio and not just have to rely on those high yield mature business that are like one step away from cutting your dividend and completely destroying your retirement plan. So sign up for the webinar. It's 100% free. We're gonna have like 1 hour presentation, 1 hour Q&A, and the replay will be sent to all registrants. So even if you cannot make it for the live event, don't worry about it. You're gonna be able to watch our replay, have the slides and all the information that is in there. All right, guys, don't forget to give me a thumbs up, like the channel as well, subscribe to the channel to not miss our next video next Thursday. And in the meantime, don't forget to stay invested.